Hey, Trader Steven here with TradersPlan.com. It is Wednesday, August the 21st. We're gonna take a look at the market, and we're gonna break down the individual sectors and the indices to see kind of where the money is flowing, see if we can find some pockets of strength. I just like to say we're just gonna go fishing. We're heading into the close on Wednesday. The market started really strong and is starting to taper off, but in my opinion, this is still fine unless you just get a drop, right? I'm totally fine with that. It's still, you can look at the Dow Jones, and even if I go to the S&P 500, it's still in the kind of the top quartile so far. So, when you have a choppy market, I'm always looking for, if it's going to start strong, I want it to stay strong, or if it's going to start weak, I want it to finish strong. What I don't want it to start strong and then just finish weak, right? So that's really what I'm trying to avoid right now. Let's really start with the S&P 500 because, we are still, even though sometimes it doesn't feel like it, the market just kind of gaps down. We've had some nasty gap downs as of lately, right? And just some kind of bad days in the market. I know this was a very bad day in the market. This was a bad day in the market. So, it's just right now, this is kind of looking like almost kind of a little mini double bottom. And I always try to, for the most part, I know the news is just everything is surrounded this trade war right now. I don't even think it's about really interest rates anymore. I think just the market is on pins and needles, about the trade war. Or is China going to add more? Are we going to add more? Are we going to dial back? And every time, just the market goes one way or the other. So, but, if we kind of analyze this double bottom right here, for now, right now, we really need, the green line is the 50-day moving average. The red line is the 20-day moving average. Today, we're kind of popping back above the 20-day moving average, in a reasonable up day. So this kind of needs to bounce out of this, but you can see that when you come down here, the low of the S&P 500 was 28.22, then it was 28.25. So we didn't quite, what I would have liked to have seen is kind of an undercut of this low, kind of run out all the stops, give that 200-day moving average a nice kiss, and then continue to go on. And that didn't happen, but we still kind of have a little mini double bottom of a rejection, bounced back, got rejected, the 20-day moving average came back, and is now breaking through. Now, this is not a definitive break, because you can see right here on downtrends, you can look at these 20-day moving average, it gets rejected, comes back, punches through, and then gets sold off. So it can pop above the 20-day moving average a couple times for a couple days and then kind of pull back. And that just really means you're in a trendless market. And for now, I'm going to really look at it like we're in a trendless market right now, even though some stocks are acting well in our overall portfolio. But right now I'm really kind of looking for this 20-day moving average line to kind of curl back up. But probably more important, I'm really wanting breadth to strengthen again. I want the price to go. I want the breadth to follow, but I prefer the breadth to lead out of here. So far, that just hasn't happened. And we'll look at that here in a minute as well. So right now, could just be in for some more chop. We also got to keep in mind we're entering a period that is historically weak in the overall market. Does that mean sell everything and just come back in October and November? Absolutely not. I think that's a silly strategy. What that means is just pay attention, right? Pay attention to the market, the price action, the breadth, because wouldn't be surprised if we just kind of chop around for a while. So, but right now I'm really looking at the glass is half full. We're still above the long-term moving average, still above the 200-day, the blue line. The green line, which is the 50-day moving average, is still trending up. I mean, it's not going to go straight up. It's going to shake you out a couple times, but it's still trending up. So I still, the long-term picture is still good. I think just the short-term picture is not as strong. Now, when we go back to I'm going to look at the Russell 2000 for a second. A lot of people look at the Russell 2000 as a leading indicator. I do not. And I think this year is just really the perfect picture. You have the NASDAQ and the more conservative S&P 500 just absolutely at all-time highs. And you have the small caps that have not. And if you were to look at small caps and say, well, this is lagging, so I'm just going to not participate, you would have missed some really good moves. So, right now, just if you look at the Russell 2000, it's been consolidating for over a year. It has not hit its September all-time high. Now, you could make the bearish case for that and saying, okay, the market's not going anywhere. This is kind of in a flat sideways pattern. But I'm going to make the bullish case because the S&P and the Nasdaq, they have hit all-time highs this year. So that's kind of why I look at small caps, but I don't really look at them as a leading indicator at all. But what I would like to see and what I'll be interested to see is, it hasn't gone anywhere since February. It's actually down since February. It hadn't even hit the February high. I'm going to be interested if this starts to kind of move out of here. Right here, for a second, I thought it was going to, and it didn't. The market just kind of got hit, probably more trade war news. But if this kind of comes out of here and this really breaks this, and then, the small caps, break this downtrend relative strength line versus the S&P 500, that to me shows risk on, and it could have to do with the dollar relationship. But I think the point of this chart is I really want to show you that I don't think you can look at small caps and use that as a real indicator just because they have a mind of their own. So I'm really just looking at the Nasdaq. I'm looking at the S&P 500. Those are the main price action charts that I look at. Right now, small caps just continue to lag. When we go over to the breadth chart, now this is the very short-term breadth chart. Right now, only 42% of the stocks are above the 20-day EMA in the S&P 500. So I'm looking, I'm looking at kind of what's rallying out of here. Now, if we kind of look at this for a second, sometimes I like to play the double dip, and even though you might look at the double dip on a breadth chart like it's meaningless, but if you look at this right here, and this is something I was talking about last week, when you get the double dip in the RSI or you get the double dip in the breadth, that last dip, that's what I look at as a shakeout, right? That's kind of the last shakeout. But you can see right here, you have a dip below 30, a dip barely back to 30, and then a second dip below, and then we kind of got out of there, right? Well, then it happened again. You had a dip below 30. You made it to the 30 level, might have made it a little more, might have made it a little less. It looks like the high was 29, 40, but that's pretty close. And then it kind of came back down. Well, look at this. You have a dip below 30, a dip back above, dip below, came out, nice rally. Now here we are. We're in the official double dip, or you could even call this a triple dip, but now that this bigger leg's happened, I'm going to look at this as kind of a double dip, right? You came out, you dip back down, and now you're coming out of here. So I'm not saying this is going to shoot out like a rock, because I don't think that's going to happen, even though it could. But I'm just saying, like, if you look at all these kind of double dips in the breadth as of lately, or at least in the last 12 months, I mean, history would tell you that we could rally out of this, right? And if I go back, the breadth right here has moved above the breadth in the middle of this pivot, in the middle of this W, right? But if I look at the S&P 500, the breadth or the price action has not surpassed the middle of this W like it has in the breadth. What that's telling me is the breadth is slightly leading. This isn't a definitive lead, but that's something that could be positive or something to keep an eye on to investigate further. Okay, so breadth so far is leading a little bit better than the overall price action of the S&P 500. Now, but breadth doesn't tell you the whole picture, right? So, you have technology that's kind of strong, financials that are weak, which makes sense because yields have just got crushed. They're directly correlated with yields. You have consumer discretionary stocks that are not that strong, a little weaker than the average, so technology is better. You have industrial that is 34%, so technology is better. You have healthcare, right, that is slightly better than technology, so we might try to find a pocket of strength within there. You have staples, which is much stronger, and to me that's not the best sign, right? Because staples are more defensive in nature. Energy is still the weakest, so it's just been weak for a long time. I'm looking forward to, well, I wouldn't say I'm looking forward to that because that probably means gasoline's going up, but there will be a time where this surges out of here, and it surges out of here in a nice manner. You have materials that are kind of middle of the road, and then you have utilities. So you got utilities are strong because bonds are strong. you have staples that are strong because bonds are strong in a weak market. So, I look at this and I could make the bullish case, right? I could make the double dip case that I just made. Breadth is slightly a little bit better than the price, slightly. But when you look further under the surface, I could also say, okay, but what's probably leading that is staples and utilities. So you can, look at it half full or half empty. What I do like, though, is I do like the technology is up here as well. And let's investigate a little further on the healthcare to see if, biotechs, medical supplies, stuff like that, more aggressive stocks, if those are leading as well. So right now, I would say these are defensive in nature, and breadth is still overall weak. So I'm just trying to find a little bit of window, a little bit of crack for us to get out of here. But right now, the short-term picture, like I said, is still weak, still not strong. But I'm finding some growth stocks that are acting okay. And that's what I sent to my subscribers this morning. As long as growth stocks aren't getting slaughtered, I think I can hang in there, right? I think I'll have enough stocks, in my portfolio that are going to be strong and are going to outpace, the weaker ones, right? So if we look at, let's look at the overall breadth, the longer term breadth. It really hasn't moved a whole lot. So if I look at the breadth right here, right now you have 53% of stocks that are above the 200-day moving average for the S&P 500. Again, you're just kind of in trendless mode right now. We have a corrective activity, not a deep correction or anything like that. Like, the price, I just kind of wanted to show you the price, for the S&P 500 has only decreased a little bit more than 7%. Right? That's normal pullback stuff, even though it sucks in the middle of it. Don't get me wrong, it's not fun. But, it's nothing to be too scared about. Like, it's just normal stuff. So we'll just, until it becomes more than normal, if it rolls over and undercuts this leg, right? If it undercuts these two levels and then breaks the 200-day moving average, now we're looking at something different, right? Now the tone would really change. And if it breaks the 200-day moving average, I could almost bet dollars to donut that it's going to pick off this level right here. So you could, if it picks up, steam to the downside, it could really pick this level off, and this level off all in 2 days. Just whoosh, one fell swoop. But keep in mind, just like right here, this level got picked off, the 200-day moving average got broke, and then all of a sudden it just bounced right back. Everyone was scared out of their mind. Sky's falling. Sky never fell. But so you look at these levels and they can get picked off very, very quickly. So we'll continue to have to keep an eye on it. Right now, not a whole lot is really developing. So let's just kind of bouncing back a little bit in the day. But let's look at the sector summary, and then we'll look at the industry summary to just really see what's moving today. So consumer discretionary is up a lot more than the next, which is technology. And then REITs, utilities, and staples are at the bottom. I think that's a very, very bullish sign. Now, one day is not a trend. Not even close, right? But, when I'm looking at this, I'm like, okay, I have a nice day in the market. We're just now moving above the 20-day moving average. Breadth is still weak for the most part. But, you can just build this little by little. So, cautiously optimistic until I'm not. Now, if we look in the last 1 week, now, consumer discretionary, there's definitely money flowing in to the more aggressive stocks. So even though breadth, for the most part, is stronger in utilities and staples, but that could have just as much to do with the correlation of, the inverse correlation with yields dropping, right? But I like this. You want to see this in the last 1 week. What is the strongest? Now let's look at the last 1 month. Now, this is to be expected, right? You go further out, the market has been rough. It just has. You got REITs and utilities at the top. So what I look for in this is I say, okay, I know that the market's been challenging the last 1 month. I expect the defensive stocks to be towards the top, which that makes sense. All three are up there. But what is holding up the best, right? Like out of the more aggressive stocks. So when the market is challenging, that's really when some industries stand out. So when I look at the more aggressive industries, the ones that should be up, when the overall market is strong, like what is down the least, right? And I look at healthcare and technology is down the least in the last 1 month. And that makes sense if I go back to the short-term Brent chart, and because I looked at technology is at 45%, healthcare is at 48%, it's matching, this action right here. So I'm interested, okay? So right now, I'm kind of interested in this right here to see what's going on. If I can kind of break these down even further, I want to go to table view, okay? Now, I am going to, I'm going to look at the 1 week in the last industry because the market's been up the last week. So I want to know what more aggressive sectors are up in the last week. Now, why am I looking for aggressive sectors in the last 1 week when I could be looking at more conservative sectors in the last month? Because in the last month, REITs, utilities, staples, they're up the most. That's not to say I'm not going to buy them, but like the market's been challenging. The defensive sectors have been doing better. When the market starts to rise, that trend could pull back. So I'd rather set myself up for some more aggressive names than try to just play conservative stocks that are outperforming just because the market's under pressure. Like I don't always feel like I have to be in the market. Doesn't mean I won't buy the REIT, the occasional REIT or the occasional utility if it looks really good. I've done that before, but I'm not going to just buy just to collect, clip my dividend. So if we look at consumer discretionary in the last 1 week, home improvement stocks, okay? So housing, let's kind of open this up. I think you've had FND. That's something interesting right there. That's an interesting chart. You should look at that. I'm very familiar with that. But, Lowe's, I know, had a very favorable earnings report. So if we look at that along with FND did several weeks ago, that's moving today. That's moving discretionary all in all. This gap will fill, so that might be one to put on your watch list. So you got Lowe's, FND. I know FND's extended lumber liquidators. Probably another earnings report. So I think what's happening is a lot of these stocks and these housing, home improvement stocks are reporting earnings. Now this is a very small industry. Look, this industry only has a handful of stocks, but there's a broad participation in them. So I think this is a nice honey hole to fish in. Let me close that out. So right now, in the last 1 week, money is flowing into home improvement retailers. Personal care up 6%. Might come back to that. Energy, renewables, just keep. Now, oil, glass, pipeline, that's all weak. But, the solar stocks of the world, they just continue to show relative strength. And I can show you a chart, but most of them are probably already extended. Feel pretty confident saying that because I've seen some of these charts. Well, that one's not. I stand corrected. So this Jinx Solar, it's in a corrective kind of, could call it a bull flag, call it pull back, whatever you want. It's trying to make a move today, but it's kind of selling off into the close. But it's got a volume bar right here. So I don't think this is a weekly reversal pattern because it started in last week. So I know this week started right here, so it wouldn't undercut the previous week, but it might be one to watch. Let me look at SunPower. Yeah, this one's long gone. This is not going to be something that I buy. This is just, from 5 to 15, just kind of zigzagging its way higher. You could easily have bought this as it just bounced off the 50-day moving average. You can say 1 bounce, 2 bounce, 3 bounce, 4 bounce, 5 bounce, 6. Who says moving averages don't work? So I think the solar stocks are very strong right now. I just, they're not, a lot of them aren't my kind of setup. So we'll just kind of continue to kind of go through here. All right, so healthcare. It's not as strong as I really wanted. I'm kind of interested to see if I can go back to look at the 1 month to see if any healthcare industries have stood out. So No, not really. Medical supplies is actually down. Let me go back and look at the 1 week chart. No, it's just not standing out. There's not enough broad participation. Now, what that tells me, the healthcare ETF that I was looking at, it could be cap weighted based on the stock's weighting. So you could have some really big stocks that are weighting that overall portfolio, but all in all, as far as the breadth, not as strong as I look. That's why I always like to look at something on the surface and then kind of dig a little deeper. So, I don't see anything that's standing out so far. What I'm seeing in the last week is home improvement stocks, Lowe's, Home Depots of the world. They're standing out the best. Materials, semiconductors, technology. So you have semiconductor stocks that have kind of bounced back, 4.85. Let's just kind of look in this for a second. That's pretty strong right there. That's a lot of broad participation. So, this is really something right in here. Not familiar with that name. Kind of look at that real quick. Yeah, that's already long gone. Probably a smaller cap name. NVIDIA, that's a name we kind of all know. You can see it gapped out of here on earnings. So this is kind of a nasty downtrend. This doesn't look like anything too exciting. It's in a big first stage rectangular pattern, but it did gap up on earnings and some volume is coming into that. So I don't know if I'd buy it here, but I think that could be something that you could keep an eye on. Let's see if there are any other bigger names. Lattice, I'm not familiar with that name, but we can kind of look at it. Yeah, this one's long gone as well. That's just not something I'm going to get involved in. 5 to 20, it's already quadrupled, and it doesn't really find support at moving averages. So that right there is just not my kind of stock, because it's hard to predict or anticipate what the next move is, in my opinion, if it doesn't respect the moving averages. Okay, so let's go back up here. REITs, it's real estate services. Aluminum stocks, so we can look at that. Healthcare, specialty finance, renewables. We're going to go back through here in a second. So you got home improvement stocks is the winner so far. Consumer staples, man, it just doesn't really excite me. I'm sorry. I'm looking for the fast movers. Although, sometimes you can find some gems. Estee Lauder, yeah, probably an earnings gap up. It's in a bull channel. It's just kind of in a big uptrend, but again, it's kind of hard to predict unless you catch it just right. So I'll probably pass on that. Revlon, there's some buying off the bottom right here. This could be an earnings move, and then look at that, kind of straight off the bottom. I have a tight little mini flag. This could surge out of here. I want to look at the weekly chart on this one. Yeah, it's not green yet, but you can see there's definitely buying off the bottom. And then if you go back, you can probably see it's always found support in the $15 area. So there's probably some major institutions stepping in to support this stock. Let's go down here. Let me kind of close out some of these so I can continue to look further. Look at specialty finance. Let's see what's in there. Okay, I'm going to look at some Paysign, P-A-S-Y. Let me look at that real quick. I think that's a strong one. I think I've seen it. Yeah, this is a pretty strong one. This has already made some major moves, but even though it's been in an uptrend again, it's kind of hard to catch just because I don't really see any phenomenal patterns. Like even the patterns themselves are really choppy and volatile. Kind of got really choppy and volatile. So I typically try to stay away from volatility. MCSI, I think this is kind of, let me look at the weekly chart on this one. Man, that's a weekly, boy, that's what I call a steady Freddy right there, where it just rides that 10-week moving average, just clear as day. Nice correction in the bear market, reset the deck. Got a weekly reversal pattern right here. Touched touched that 40-week moving average. You can see right there, slightly above average volume. It's not a huge volume bar. I bet that was an earnings bar, or I bet that was an earnings week. And then, I mean, this is kind of classic textbook where, you know, you see a nice uptrend, and this is what you want to see. You got a technically strong stock. It's got a scooter ranking of 92. Just pulls back with the overall market, gets a nice earnings reversal, touches the 200-day moving average support, and then gets right back out of there. So that's something probably worth keeping an eye on. Try to see some names I know. Yeah, that's long gone. Okay. So we'll kind of go through one more industry. Anything stands out? I think we should look at REITs. Actually, I think I looked at REITs a couple weeks ago, but I want to see if anything really stands out. See what these suckers look like. CBRE. Yeah, it's kind of choppy for a REIT. I don't know, man. When I think of a REIT, I think because of the dividend, it should be a little smoother. These are just some big kind of red bars. I don't see any accumulation bars down here. Yes, it did touch the 40-week and then reverse back up. A little choppy for a REIT, in my opinion. Let me see. Let me just kind of look at some other ones. Yeah, that's ugly as sin. I'm not going to touch that. It's just kind of got a gap down. It's just bouncing back. So far, I'm not impressed. We'll look at one more. Yeah, I mean, it's in a downtrend. There's no volume buying off the bottom except for right here. Something happened right here. But apparently whatever it happened didn't cause the stock to continue because it's about to retest that 41. No accumulation here. So I am unimpressed with, so far, the REIT stocks, the real estate services stocks that I'm seeing. So we looked at semiconductors. There's a lot of strength in there. We looked at REITs, unimpressed. Let's look at aluminum real quick because that's also standing out. And there's not a lot of aluminum stocks. There's scooter rankings on these. I bet this chart looks pretty ugly. It's in an uptrend, and it has been all year, but it's in a very, very choppy uptrend. Very, very hard to play. So I'm just not going to play that. Alcoa, we'll look at that, see if it's any prettier. That is not any prettier. That's in a major, major downtrend. I'm not going to touch it. So you have, let me see if there's any strong, technically, ranking stocks. No. So let's just kind of get back out of here. I think this price action right here is just junk buying. So looking at all of them, you know, there's a lot of strength in solar, a lot of stocks that have already kind of extended, but right now, I think right now, kind of come back to this. This really seems to be the winner. So I wonder if I can. We already looked at Lowe's, which is gapping up 15% today. Actually, no, it's up 15% in the last week. Where we're looking at the week. We look at FND. You actually had a weekly reversal pattern right here. Nice weekly reversal pattern. This thing gapped up like 20%. I think I emailed this to everybody, and then the market pulled back a couple weeks, but it stayed strong, and now it's just really surging out of there. Lumber liquidators. You probably got some earnings moves right here. I'll look at that on the weekly chart. That's not really that good because there's some major distribution right here. So I'm looking at Lowe's and FND right now. That looks pretty good. Home Depot, you know, probably reported a nice earnings this week too. So even though this is not a weekly reversal pattern right here, it is a continuation bar right here. I mean, look at the volume right here. So you got volume right here. Now that's a weekly reversal pattern right there. Look at that. We came down 40-week, reversed under it, closed above it, big volume, kind of came back, tested it again, and then it took off. Second mouse gets the cheese. Nice pull back, touch the 40-day moving average, kind of coming back out of here and showing some strength. So, you know, it's not, I think this right here, out of everything we looked at, I think these are, you know, some of the strongest stocks. The money is clearly flowing into them this week.